Why do gold prices rise during war? Gold doesn't produce oil. It doesn't generate income. It doesn't power industries. Yet when war begins, gold often becomes more expensive. Why? Because gold is not just a metal. It is a store of trust. During war or geopolitical conflict, uncertainty rises sharply. Investors, governments, and institutions begin asking difficult questions. Will currencies remain stable? Will inflation increase? Will financial markets fall? Will trade routes be disrupted? When uncertainty increases, investors move money away from risky assets like stocks and into assets perceived as safe. Gold has historically been considered a safe haven asset. There are 4 major reasons why gold prices often rise during war. First, fear and risk aversion. War increases unpredictability. Investors prefer assets that are not directly tied to corporate profits or government policy. Gold is globally recognized and not dependent on one country's economy. Second, currency instability. Wars can weaken national currencies due to rising debt, capital outflows, or economic slowdown. When currencies lose value, gold, which is priced internationally, often strengthens. Third, inflation expectations. Conflicts can disrupt energy and supply chains, pushing prices higher. If inflation rises, investors buy gold because it has historically preserved purchasing power over long periods. Fourth, central bank behavior. During uncertain periods, central banks sometimes increase gold reserves to diversify away from foreign currency risk. This adds structural demand. Historically, during major global conflicts and geopolitical crises, gold has often experienced price surges, not necessarily because of physical shortage, but because of increased demand driven by uncertainty. It's important to note, gold does not always rise immediately or continuously during every conflict. Markets react based on scale, duration, and economic impact. But the pattern is consistent. When confidence falls, gold demand rises. In simple terms, oil rises because supply may be disrupted. Gold rises because trust may be disrupted. And in global markets, when fear grows, gold shines.